Opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world. And let me tell you, I was at the dollar store today and boy, these people are crazy. Anyway, back to the story that we're here for. Today we are here with one of our amazing sponsors, Fisch, and joining him with his new company, Revolution Mortgage, is Brian Susi. So welcome, Brian.
Thank you.
So today we have Max and Brian. We are going to talk about what is going on in the market, where are rates at today, and what's going on with this condo market. Like, I think the agents are always asking, and I believe that people that own condos from out of state are really not up to date on what really is going on. So I really want to talk about that and what you guys think the future holds with condos, and talking about, why it's so important to get so many documents when you're listing the condo. Because I feel like without having the budget and the insurance policy, you're dead in the water. So
yeah, those are the most important things nowadays that our underwriters are looking for. If you have a condo that doesn't have the correct insurance deductible, that can kick you out. 5% is typically what we're looking for.
Okay.
If it's more than that, typically underwriters or Fannie Mae doesn't like it. Freddie Mac may, but mostly it's not. It's 5%.
So if there is a condo that has a 10% deductible on insurance, is that something you guys can do? Do you have programs for that?
So I'll pick that one up, Brian.
Yeah.
So
pick it up.
I don't know if they
pick it up, Max.
Awesome. Hey everybody. So 10% is typically a problem, right? Because the guidelines are pretty clear, and they say that if a deductible exceeds 5%, that it's non-financeable, Fannie Mae or Freddie Mac. The gray area comes in to where some of the guidelines talk to, okay, well, if the deductible is over 5%, but it's for a geographically based reason, which some would consider Florida hurricanes being a geographically based issue, peril, they call it in the insurance world, then that is the only way that we've been able to get around that 5% cap, is making a case that, okay, this is just for the wind and hurricane deductible, and it is geographically based. So we kind of lean on that guideline, but that's at an underwriter's discretion. It's not a universal way of looking at it, if that makes sense.
Do you have any non-conforming loans to take over those properties that don't have the right?
Yeah, so that's a good question. It gets into, okay, well, what happens if it's not financeable with Fannie Mae or Freddie Mac? Well, you can look at portfolio products, okay, right? Non-QM, where a bank is going to hold on to that loan or sell it to a investor that's going to look the other way, right, on some of those guidelines. And those are always available in those scenarios. Now, full transparency, those come with higher interest rates typically, 1% to 2% higher than what you get on a normal conventional. Maybe you need a higher down payment, where conventional you might be able to get away with 5, 10, 15, 20%. These types of loans you might need 25, 30%, right? So there's always catches and caveats to anything that, or any loan type that's going to look the other way, but absolutely those are available.
So prior to the show starting, Brian, you had started to talk about that you feel that in about a year, we're going to see resurrection of the condo market.
We're going to see changes, and we're going to see.
We're already seeing changes.
We're going to see changes that are going to come for the better of the condo owners.
Okay, give us a couple of.
With the new rulings that have come out and new rules, that they're supposed to have the reserves fixed.
Right.
So with them fixing reserves and making it where there is 10% reserves in the funds for them, typically you should be able to get financing on these properties that were not financeable.
So we did a show last week with JK Closings, and we talked about, it used to be everybody had a vote on these things being raised, like their budgets. Now it's going to be, if you are not hitting that guideline, you're not hitting the numbers of reserves, that's it. The board can just go ahead and implement it.
From what I'm understanding, and I'm not an attorney, nor do I claim to be one.
Only on TV.
Only on TV.
Yeah, not radio.
From what I'm understanding and being told by attorneys is, in specific cases, they are actually going to, if they don't fix their reserves and fix their budgets properly, the county has the potential of putting liens on specific whole units. So,
oh, wow.
Yes. So with this being said, and it will make it where if they don't comply with what needs to be done, these properties won't be able to be sold cash nor financeable.
Right.
So that's what's going on.
I was out at a condo on the beach 2 weeks ago. This was eye-opening for me. They literally had these big posts in the corner holding the building up in the unit. It was in the lady's unit. And I'm saying, and she's like, well, do you think I can rent this? I'm thinking to myself, definitely not Airbnb, because who wants that on vacation, right? Yeah. And then I'm like, I said, you're going to have to take less money, because who wants that long term?
No one.
Are you sure those were structural posts and not skinny metal poles?
I'm positive. Well, yeah.
I'm just
it
making
was
sure.
not your wife's apartment or your mother's. I don't know. I'm just kidding. So I just had somebody today. They said to me, "Listen, if you know of any great deals on condos that I can now Airbnb in a condo is almost like impossible. There's like it's a needle in a haystack to find that." They are out there, needle in a haystack. But maybe it is the opportunity to pick up some of these. People are getting desperate. Had somebody call me the other day. They're listed with another agent, and they said, I don't feel like my realtor's representing me. I want a new realtor. So I pulled up the listing and I looked. I mean, they did use their iPhone for pictures, I will say. And there was stuff everywhere. It was a mess. But and they were like, can you sell this faster? The woman paid $285 2 years ago. The realtor has her listed right now at $199.
Wow.
Now I did look, and there were other properties at $220, similar, in the same complex. Like,
how was their budget and stuff set up? Was it capable of finance, or was it?
So the budget was good, but the building requires 10% down. So
Kind of normal.
Yeah, but you have other competition. There's so much competition out there right now. It's like, how do you, I know for me, one of the things that works really well is doing social media. It sticks out because if you go to MLS, you're overwhelmed by how many you can look at.
Yeah.
So I find that a lot of times people want to do business with people they know, trust, and like. And if they see oh, you have something, you're pointing it out to them, it brings their attention to it and say, oh, I have a buyer for that. Let me bring them out to show them, right? So
well, that does, making that connection definitely helps everything possible. That's the way that the world works. That connection is really what people are looking for. And not necessarily saving them money, because if you're selling, I don't want to say selling, if you're giving them a service that's superior.
Right.
And you're doing things better, like doing a photographer compared to an Apple phone to take photos.
I don't know. They say these Apple phones are supposed to be great these days. I didn't think it looked that great.
I'm just saying, when you're doing things that are a betterment for them,
right,
they will choose you over somebody else regardless. And with these condos, I think that you're going to see a situation where people that have cash will be not financing them. They'll be buying them and refinancing them later once it's time, and it could be a cash cow. The problem is, like this one client that you went to look at, are they willing to take low enough to get rid of it because no one else is going to buy it.
And I'll be honest with you, like I get somebody's going to make money on it, and I don't feel that they were being represented the best, but I would never say that because I would not.
No.
But at the same time, like I think it would be minuscule the change by doing the pictures. I think the market is what it is in the condo industry. And for some reason, it's funny, so I'm talking to a customer today, and he says he's in Georgia, and their market's booming, and he's saying, I'm reading your market's soft. Now, people are buying. Like, if they weren't, like, Max, how many loans are you doing a month? Like, you got a huge team. Like, you're crushing it.
Yeah, I think the market being soft in general is, I think that can kind of be used as a scare tactic, right? And I think it's also relative because, a Georgia market booming might be a soft South Florida market, right? And so you have to, you kind of have to take those things with a grain of salt because at least from my experience, and I'm sure from yours as well, like people are still moving around. People are still buying things. There's a lot of pent up demand right now in the market. I'm getting, people filling out loan applications at the highest clip I've ever gotten. But are they closing and purchasing homes at a higher clip? That's a different story. So what does that tell you? That tells you that there's a ton of people that want to buy, that are qualified to buy, but they're waiting on something.
But why? And I guess the whole purpose we're here, right? And you're a mortgage person, I'm a realtor, right? We have other people that are doing the real estate transaction part of it. Like, I'm not here to tell you to buy because I'm a realtor, but I'm also here to educate, right? I'm here because one of the things I could say is I could go back to clients that I met 20 years ago that I look at what they paid for their house. If I go back 10 years and I look at what my client paid for their house, if I go back 5 years ago and look at what my client paid for their house, every single one of them have made money.
Yep.
Why would you not buy unless you're looking? If you're going to have to move in 2 years, then maybe, yeah, you're right. It's not a good move. Look at your whole picture.
People are afraid.
But afraid of what?
They're afraid.
Can you afford the payment?
They're afraid when they're listening to the media thinking that there's a bubble. We, as professionals, know that we're not on a bubble. The bubble that happened last time, there was trends that showed very differently than this time. And you're now also put into a situation where when the market burst, it was due to
bad lending practices.
Mortgage brokers not doing the proper thing. We were allowed to
you were
state income, state assets, which are no longer really available in the Fannie Mae, Freddie Mac world, as well as you're also talking about rates that were so low when these people bought during COVID. It would never make sense for them to refinance in the 2%. I don't think, personally, in our lifetime, we're going to see the 2s ever again. I think it was a fluke. I think it was something that was a weird phenomenon.
Maybe for a 15-year, two and change.
I would love to say I could say we're going to see it. I don't think we will. I think where we need to be is in the 5s. I think that makes more sense. They're thinking that they can buy more in the 5s. They're being told that rates are going to come down. They'll buy more in the 5s. The problem is we're in a market that there's, especially and Max, tell me if I'm wrong, that we're in a market where there's no place to build. As long as you can't build and people want to be where we live in paradise.
But some people don't want the heat, so they go to Georgia, and their insurance isn't as bad as ours.
Of course.
So it makes it a little less affordable here. But we're going to go to commercial break. When we come back, we're going to continue this conversation and see how we can help everyone out there, whether they be realtors or buyers or sellers. How can we help you? Stay tuned. We'll be right back.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi, everyone. Welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today, we're talking about the mortgage industry. We're talking about condos, what's going on with them. Should we buy one? Should we not buy one? What do you do? Like, should we even be buying real estate? Like, I don't know. I mean, actually, I do know.
You do know.
I do know. So if you're thinking about buying or selling, you definitely need to give me a call. Laura Sanders, RE/MAX Direct, 954-650-0827. Or you can check me out on the web at lauracell.com. If you're thinking about getting a mortgage to buy that house, my buddy Max and Brian can help you. So what's a good number to reach out to you guys? It depends if you like them bald or you like them with a lot of hair.
You can reach me at 954-214-4795. B. Susi at revolutionmortgage.com. Or you can also reach Max at
954-729-6933. And that's max at revolutionmortgage.com.
I love these emails. They're so easy.
Super easy.
Oh my God. Like, who even, like, literally I could go B. Susi Revolution at revolutionmortgage.com.
Yep.
That's
Simplified.
awesome. It's very simple. I like that.
Yeah.
Yep.
So tell me, before we go back, because definitely everybody should be buying. It's just a matter of what fits your needs. Should you be buying a condo? Hey, if you're getting a really good deal and somebody's, and you're really scrutinizing and asking the right questions about the budget, then I would say it's a good thing to do. Do you have any suggestions on what people shouldn't do when buying a condo?
Yeah, absolutely. I have a lot of them.
Okay, let's go.
When purchasing a condo, you have to make sure that you're partnered with professionals that are going to look at all of the condo financial, documents and even rules and regulations, and even as it doesn't pertain to finances, right? It's just important because what people need to realize is the reason why banks scrutinize condo associations and condo buildings so much is because one unit owner has very little control over what goes on building wide, right? And that's why it's super important. You could have all of your I's dotted and all of your T's crossed and be the most prepared and responsible individual on the planet. But if you're buying into a condo association that is not, or a condo building that is not being kept up with, then that's going to impact you greatly financially. It could displace your family potentially. And so it's really important that you partner with realtors like Laura and with people like us that are really well versed in the condo arena to be able to advise you correctly. And that's why, number 2, is do not use an out-of-state lender to purchase a condo.
Don't.
Because condo rules vary state by state. And if they don't understand the ins and outs of condo financing in Florida, then you could potentially lose a couple $1,000s on inspection, appraisal, condo questionnaire.
And deposit.
Your deposit, absolutely. And you can potentially, if they're not looking at things right, even if they get you financing somehow, once you move in, you could be dealing with a lot of issues down the line if they're not looking at certain things or making you aware of certain things. So, that would be my 2 don'ts, if that makes sense, when purchasing a condo.
Right. So agents, before you make offers, not only reviewing the budget, not only making sure of the deductible on the insurance, but also, is it in a flood zone? And do they have flood insurance?
Correct.
That's a good one that gets you guys right at the end, right? Now, somebody that's very versed like you guys would ask this information up front.
I can tell even someone like you that does a lot of listings, it's important for you to even get the minutes for the last 6 months up front.
I asked for 12 months.
Because we're going to look at it. Our underwriters are going to ask
Yeah.
for these things, because if they talked about an assessment coming up in the future,
You've now
it's
protected
going to red
yourself.
flag the underwriter to say there's going to be more to the debt to income ratios that could affect them from closing properly.
Right.
If it's basically, I had one, they met annually. So with that being said, they had done it 4 months prior to closing. My underwriter turned to me and asked me for 5 years because they met annually of minutes. I fought with them. We ended up giving them 2 years and they were happy and we moved forward. But this is part of the process. The process is none of them are, like what Max is saying, pick someone that knows what we're doing, because not one of them are the same. You can do it in the same building and it can be different. And it's just funny.
So I had made a post the other day, and you guys might have seen it. And I said, hey, got a condo, buy as little as 3% down. I knew the budget was already good, had 10% in reserves. I knew that the insurance had 5% deductible, not 10, and it wasn't in a flood zone. So I started advertising. I had a realtor say, that's never going to work. You get to the lender and then they don't do it. And I'm just like, slow down, slow your roll, like pull back, like this is going to work. And I was nice, but then a lender jumped in. No, it was great. I was like, thank you. Because the lender was like, if all these things she looked at are good, there's no reason for this not to close 3% down. Association doesn't have a requirement, but it's like, I feel like we need to stop being so negative, and look at each deal as it is.
It's in people's character to be negative, to always find the flaws in things. Unfortunately, that's the way it is. And it's up to us to educate people properly for them not to see things in a negative light. And that really makes a difference. Educating not just your clients, your peers.
Right.
Because they don't know either, obviously. They're not paying attention to or being told properly by a good lender what could be done and what couldn't be done. If they were thinking that it was going to go FHA 3.5%, then they may have been right.
Right.
But if they were talking about 3% conventional and not knowing that the property was approved for no reasoning, it had to have a down payment, a special number from the association, it could be 3%, 5%.
Right. Now you probably have a lot of buyers looking for stuff like that. So come on, Max, let's go. Come on, I got some good listings for you.
Yeah, condos. Unfortunately in South Florida, if somebody's approved for a certain purchase price, it's almost, as a lender, you almost have to start preparing that all they're going to be finding are condos, right? And what that's forced our office into is being well versed on those specific areas to help coach people through the condo financing process. And so, yeah, we have a ton that are looking for condo associations, but here's a positive. Here's a light at the end of the tunnel, because what I'm starting to see is, and we've spoken to this about the reserves, but I'm starting to see that a lot more condo associations these days are having sufficient reserves. They're starting to get out of the 40-year recert repairs that they had to do, because in the last few years, they all had to get inspection reports. There was all stuff on the inspection reports that had to be done. And so they're starting to come out of that. And really where I see a lot of opportunity in the condo space, and as a lender, obviously this wouldn't have anything to do with me up front, but it's with people purchasing these condos cash. Because if a condo, think about this logically for a second, and I think that agents should be pitching this to their clients and investors, and family and friends should be telling as well, that logically speaking, if a condo association isn't financeable now, but they're doing the things that they need to do to become financeable, right? Then it would lend you to believe that there's opportunity for cash buyers. Because if somebody can buy something cash where they don't have to deal with the bank, and then a year or two later, all the repairs are done, the reserves are fully funded, and now people can buy it with 3% down, you just went from a 10% of the population that could buy this condo to 95% of the population.
Now, boom, you just told people how they can make money.
That's it.
Well, that's what the show's about, isn't it?
That's right. And I always like to point out the obvious.
Yeah.
So we're running out of time, but before we finish, I just wanted to quickly, I know that we had been talking about you with Nationwide Mortgage, now you're with Revolution. I want you to tell people why you made that change and what is so great about Revolution so that people can know why they have to continue to use Max and Brian and Jake.
Yeah, there's a lot of us. So absolutely, that's a really good question, and it's really one that I've been thinking about a lot, in the last 3 to 4 months, because as everybody knows, I owned Nationwide Mortgage. That was a company that I owned with my partner Frank, and it's a hard pill to swallow, right? When you make a move like that, and you're bringing in affecting everybody's lives, and you're bringing them over to a new company. So we carry that weight on our shoulders to be able to say, hey, we need to do our due diligence to make sure that this is the right move for not only us but for everybody with us. And Revolution gave us a platform. I became one of the top loan officers, not just in our area, but in the state and in the country. And I wanted to be able to continue to serve the clients of our community, but also shift from being in the loan business to being in the people business. And obviously I still do loans, and that's the medium and vacuum that I use to be able to reach more people. But what Revolution has given us is the ability and the resources to be able to scale, reach more people, duplicate maybe what we've been able to build in the last 4 to 5 years. And it's given me the opportunity to attract people like Brian and the people that I'm working with, to start to get into a coaching role. Awesome. in more of a, hey, how can I help people build their business and replicate and duplicate? And so that's where my heart is, and that's why we made the move, was to create a better product, a better process, and just reach more people.
Well, we're super excited. We can't wait to watch your journey in the next year to see how it grows. And we're super excited to see that you brought Brian over, and we're super excited to see his growing in the next year. So again, like always, want to thank you so much for all your support, and everybody for listening to Making Money with Laura Sanders every week. And until next week, we'll see you then, or you'll hear us then.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust.